Hello and welcome to BISP Solution. We are going to resume a QuickBook desktop discussion. Okay, so today we are going to I'm going to explain you about how to use the journal entry and what are its impact on the financial statements and other features, and we are going to discuss about the multi-currency options as well. The multi-currency option currency, the feature is a long one and it will take into two sessions, so we are going to first start with the general. So as a bookkeeper, or we record certain transactions, we were going to record in the normal general entries. Okay, so now in the QuickBook desktop version, we are going to create the general. Why we are going to create general? Because if we are entering, suppose, a depreciation entry, so we have to provide the general. We cannot create its invoice, we cannot create its bill. So basically we have to record the journal entry, and of course at the closure of a fiscal year we will adjust the journal entry, known as adjusting a journal entry. So basically this is the basic thing we have to perform. So how we record the journal entry in QuickBooks? So from the main menu you will see the company options, and under the company option you see that make general entries, and from this option, the make general entries, here you will click and you will see that the window is open up, and here what is the pop-up is saying to you that QB or now automatically assign the numbers to general entries. It is that when you record one general entry and when you come and record another general entry, this entry number will change automatically, because yes, the QB is memorize it that you have recorded certain journal entries, and it will be on a queue or on a sequence basis. So here now you will see the formatting. Here you will see on the main options the ribbon thing. You will see that a new is that it open you the blank entry and you can record it. Save is like you can save it, the changes. Delete, of course. Create a copy. If you want to perform the entry in a single entry, but you are just adjusting, you can create a copy and of the general entry with new number and then edit it if necessary. Okay, memorize it, you can memorize your formatting. Here is the reverse. If you want to record the reverse entry, you will see you can reverse it from here as well. And this is the print attach options and hide and list options. Here you can see the adjusting entry as well. If you are entering or recording any adjusting entry, like we are record adjusting entry at the closure of certain period, so we can just tick box it here and you will able to record this adjusting entry. Okay, so how we will record the entry? Here we will record a first entry on 1st March of 2024. What we will record an entry, suppose after recording the general and after recording here in the general entry, the balance is goes automatically to its particular COA, okay, in GL. And as we all know, the balance of the GL will end up here, will end up on the trial balance, as we all know. Okay, so this is same like we reposted one entry here, and it will automatically posted on the other financial statements of an organizations, of the relevant financial statement of a regular organization. So now just I am going to record one entry. Okay, So here we will first suppose we are introducing the opening balance equity. Okay, on 1st of January 2024, suppose. Okay, so we are just entering this cash. Of course the entry will be bank account is the debit side. Here I am writing 15,000 dollars. So here is the credit option. When you click on the tab, and you when click on tab, it's memos. You will just give the memo, the narration of the entry, like introducing funds in the business. Okay, you can write it name. When you are recording certain entry and it requires to be recorded in certain names, you can just check it on the brought down list and you will write the name. Okay, when you click on the tab button, the QB automatically take the amount, whatever the fund, on the particular on the opposite direction, that is on the credit side. So I will write here opening balance equity. Okay, so I just save it and save and close. Now what is the effect of this entry? You will see, as I told you, the effect of this entry will goes to its GL, trial balance and PNL. Here first I am showing you that here you see on the bank account, you will see that on 1st January of 2024, you will see here the entry is 15,000. It's debited on the bank account, is on the split of opening balance equity. And its second entry, that is double entry, we always do on the double entry bookkeeping system. So you will see the opposite entry is on balance equity here. So its closing balance will come up on the balance on the trial balance, and you will able to see this on the trial balance. Here you will see that the bank balance increased to 15,000 and on here. So this is how, when you post on the when you record an entry on general, its balance will goes to GL, and its balance will goes closing balance will goes to in a trial balance. And this effect is also gone to the balance sheet also, as well as PNL, and as well as on the cash flow statements. But right now this entry will get affected on the company's balance sheet. And here you will see on the balance sheet, here you will able to see, let's change the date. Here you will see the equity is come up of 15,000, and the balance of cash and bank is here is increased to 15,000 as of 30th February 2024. So this is how the general entry is recorded. Now suppose you want to record the so now the question arises, why we are using the general entry in recording the expenses while we are recording those on the enter bills and paying to the vendor? It is because general entry is recorded because when we are not maintaining the suppose we are not maintaining the vendors detail. I am just talking about the vendors, not the other entries. I'm just talking about the expenses we are paying or income we are earning. Suppose we are not maintaining any quantity record, any bill record, or any customers record, so we will just go and record the general entry to get to just to give the effect. Okay, so now I am just taking you towards to record the an expense entry. Here when you click on the companies, again the same activity on the make general entry. Now you will see the entry number 2 is comes up automatically. The date is not changed, but the entry number is changed. This is the option is same as we have done on the when we create the invoice, when we create the sale receipts. Okay, so this is how the sequence works. It is always works on the parallel side. So now we will record the second entry. Suppose on 31st January 2024 we have paid the rent. So here you will able to see the rent. So the rent is not there. Now we can create it rent expenses. Okay, we all know how to create the COA. Here we create rent expenses. Okay, you can write the descriptions and all. Just 7th close and write the rent of $1,500. Give the memo, paid the rent for the month of January. So suppose I just took the rent on at the end of the month. Okay, if you want to give the name, you can give it, and you can see when I just click the tab button on the keyboard, the amount is reflected on the credit side. Just give the name of the cash in bank and put the entry. Okay, just 7th close and see the effect of the trial balance. The rent expenses is just generated and the cash in bank is decreased by $1,500. So this is how the general entries works. So now just I am telling you this entry will also get reflected or get affected on the PNL. So just check the PNL report as well, whether the rent expenses is comes up or not. So here again, now here we will see that, sorry, here you will see 31st, sorry, here on the expense side, here we will see that on 31st January we paid the rent expenses is just gone posted automatically in a profit and loss statement. So this is how the general entry is posted. It is the most basic point that we start from. That is the initial stage of an accounting. We record the general, the balances goes to GL, and the balance will goes to trial balance, and it will post after the trial balance. It will posted according to that, according to its type, whether it is a PNL or whether it is a balance sheet. Now I am just navigate you to show this reflection on cash flow, whether this reflection is comes out on cash flow or not. Again, from companies and receivable options, we will just, sorry, on accounts and taxes, companies and financial, again, sorry, statement of cash flows. Yeah, so it is not reflecting because we haven't posted right. If we just buy the supply, if we just you can see there is nothing posted on the statement of cash flows because the rent is not the operations. Now how it will get reflected? So just suppose I am just make an entry. Now suppose again here make general entries. On 1st of February 2024, I buy some equipment, fixed assets of $2,000. Okay, buy an equipment, just give a little bit memo. Okay, so now after 7 close, you will see on the cash flow statement that your equipment is increased to $2,000. Here this is how the reflection, the recording, or you can say the equivalent required post-it is done from the GL to trial, from the general to GL to trial balance to the statements of a financials, companies and financials. So this is how we can make a general and general entries. Okay, so now we are moving forward to another topic, and another topic is of multi-currency. Okay, what is multi-currency and how to activate the features of multi-currency, and how to record the invoice, receive customer payments, pay the bills. We all the related to multi-currency options we are going to know in the sessions. This, so half part we are going to learn in today's session, and the other part I am going to explain you in the later session or in the tomorrow, that is the last session. Okay, so now what if what if a organization having a multi-currency transactions, or we can say that a company is having foreign customers or foreign suppliers or vendors. So we are going to use the multi-currency feature on a QuickBook desktop. Sometimes we must pay or get paid in more than one currency. Okay, so the currency of the country that the business registered is in called the home currency. Okay, that is here is the home currency is the dollar currency. Most transactions will be in the home currency, so we are just record the transactions in the home currency. Okay, when QB when QuickBooks displays the results of the transactions in another non-home currency, the resulting numbers are displayed in the home currency that is equivalent of the home currency. For example, suppose if 200 Canadian dollars are equal to 1 US dollars. Remember, I am just using other n imaginary numbers. Okay, then we record receiving 2000 Canadian dollars. QuickBook will display you $10 as the amount of the transaction. Add or subtract the $10 to the accounts that the record the transactions. I am just giving an overview. We are going to perform some activity. Okay, if it was 2000 Canadian dollar earned as income, the income account would increase by 10 US dollar. Okay, so if it was paid as delivery expenses, it will lower the bank account by $10 or increase the delivery expenses balance by $10, and so on. So what is the value in relation to each other when we change every day? Because we are dealing in the multi-currency fee options, the foreign exchange rate in the world will go up and will go down every day or in every minute. Okay, sometimes the dollar will go up, the other currency goes down, and vice versa. Sometimes dollar will goes down and the other currency will goes up. So this becomes an issue if we receive the other currency on day one and then transfer on day on or pay the currency on different day. Okay, on the day we pay with that currency, there will be a different value of the currency from the day that we receive the currency. Okay, so it means we are getting some realized gain and losses on the foreign exchange transactions. Okay, so we will I just gave you the example of 2200 Canadian dollar. We will continue on that. The day that we record the 2000 Canadian dollar, they were worth of 10 US dollars. Okay, suppose on the day we are going to pay to a vendor for a service, the same Canadian dollars are only worth of 9 US dollars. Therefore, what is this means? This means that on the paying date, these Canadian dollar, we assume it, we have lost $1 because of the constant changing of the exchange rates between the dollar and the other currency. Okay, why we get lost? Because we just took the service. Okay, it can be said that we are paying too less. Okay, so how the QuickBook handle these changing foreign exchanging the rates of a currencies, and how this QB will handle the transactions. Okay, so for each consecutive transactions with the non-home currency, QB will record the transaction at the current rate of exchange. Okay, we are going to perform certain examples. Okay, so now QB will record the transaction at the current rate of exchange. Okay, so each of these consecutive currency transactions will be recorded with an additional adjusting journal entry that the QB will make automatically to record the gain or loss from the difference in exchange rate. Okay, so now you see that here before we activate multi-currency or other features, I'm just going to show you here. On first, you will see on the list options, you will not able to see the currency list. Okay, you are not able to see the currency list options. As same, I am just telling you about the rate of I'm just telling you about the realized gain or unrealized gain. Here on the reports options, you will look on the company's financial. Here you will not able to see that in unrealized gain or loss or realized gain or loss. Why? Because we haven't created the multi-currency feature. Okay, so before we can record transactions with more than one currency, we must activate the multi-currency feature in a QB desktop. This means like we will go to on the preference account, on the preference, on the edit, on the preference. We also sorry, you are able to see here on the multiple currency option. You just click on it, and on the company preferences here, this is all defaulted. Why? Because we are doing in the month only on the single currency, that is on the dollar. Okay, now here you will see track multiple currencies in this company file. How? No, here we are just check it. No, we use only one currency. When you click this, here the warning is come up that you are about to turn on multiple currencies. Before you do read these important considerations, on a brief, I can tell you that if you just activated this window, you will not get back to on single currency options. Okay, this is the main core of this warning, that you will not able to turn the window to single currency. So it is saying basically you can create a copy or you just move ahead. So I just click on yes, and you will able to see that we are using. So here this QuickBook desktop version asks you to see that whether you are using the transaction in US dollar or whether you are using this type of functions. Okay, we just click OK, and the QB will restart. Okay, so it will take like 20 seconds or something. Okay, so now after we activated this multi-currency feature, we will see what feature is activated as well, as I was telling you. So now here, now you will able to see this. From the list option, you will see that the currency list option is open up page, that is activated. And on the reports and that option companies, you can see that realized gain and losses and unrealized gains and losses also is activated. Okay, now now we are going to see the multi-currency list options. When you click the currency list options, you will see that there is a lot of currencies are available in a QuickBook desktop, but certain are inactive. Why? Because we are using mostly a few currencies. I just click in include inactive, and now you will see that these are the 4 currencies that are default active in QuickBook desktop. Okay, why we use this currency? Because we are adding additional currency. We use the currency list because the list window behaves the same as any other list window in QuickBooks. All currencies are available, as you can see. Now we are just going to add Canadian dollar is already added. and Japanese yen is already added. Suppose I want to add many more another currency. Suppose I just click include inactive currency, and I will go down to see the Australian dollar. I just click on the cross button, and you can see that Australian dollar is just added. Okay, so this is how the currency is added. Now, as you all know, we are going to add some customers and vendors as well. These customers are in different country that we are dealing, and in different currency as well. Okay, so we must add the customer to the customer data. Why? Because for each customers we add to QB, we must tell the QB which currency the customer will pay us. Okay, only customers who pay us with active currencies we just put on the list will be able to save in the customer list. Okay, simply we choose the currency when we first input the new customer. It means that one currency per customers. Now let's add some customer. Okay, first of, as we all know how to add customer, I'm just going to add quickly the customer. So our first customer will be Mr. Henry Shell. Okay, now here you will be going to change this. Why you are going to change this? Because this customer, because we are adding one customer per currency, or you can say one currency per customer, because we are going to pay this customer in its other currency other than US dollar. So I am just using Canadian dollars, and just quickly create this company Henry Shell, and we move forward. We click on OK, and you can see here. Now we will add one more customer, that is Yuri Singh. Okay, and what this customer is paying or receiving, he is receiving in Japanese yen. Okay, I just click on OK. Now we also, now before that you move forward, before we add customer, I am just going to we just like we added the customer, we are going to add the vendor as well. Why? Because for each vendor we add to QB, we must tell QB which currency that we will pay them with, as same as to the customers. Okay, so now only the vendors whom we pay the active currency, just like we put on, we will pay it. Okay, simply choose the currency when we first input it. Okay, now let's add the vendor as well. As we all know how to add the vendor. Here, click on vendor, just read Charles Casina. Okay, so in which currency he was going to receive? In Canadian dollar, and we just click on OK. Okay, now we will add another customer, another vendor for the other currency, that is Yelena. Okay, and which currency she is going to deal in? Australian dollar. We are going to deal with Australian dollar. Okay, so we just created two vendors and two customers. Now we move forward, and now we just going to create the invoice. Okay, we just going to create invoice. Before that, sometimes we have customers that require that we bill them in their own currency for some product or services we deliver. Okay, we can invoice or bill any customer in any currency that we have activated and assigned to that customers. They can pay from pay platform, as we know, customer payment options that can convert their currency to dollars. Okay, there is two types of, you can say, two kinds of multi-currency transactions. Okay, transactions that are converted to or from the home currency, okay, or sorry, transactions that are converted to from the home currency at the moment of the transactions, or transactions physically made by receiving, paying, or transferring the second currency. Okay, so now we will just see the first transactions. Okay, so now we will go and enter the first bill for services in any other currency. What we will do, first we must download the currency rate of exchange for that currency before recording a transaction in that currency. Then this will establish the initial value, that is the starting value of the currency for any future gain or loss. It is the exchange rate on the day of the first transactions. Okay, when we will input the transaction with the number of units in the other currency. Okay, the amount that QB records into our accounts and customer vendor records are the dollar equivalent, that is home currency equivalent of the amount of the transactions. Now for example, first we will record on 1st January 2024 we did some editing services for Yuri, and we must bill him in in Australian dollars. He agreed to pay us 10,000 uh, Australian dollars in the future for the service. That is, we are just creating the invoice. Okay, before that we download the exchange rate on the very first time. Then we will send him an invoice for 10,000 Canadian sorry, Australian dollars. Okay, not in US dollars. Okay, then QB will create a new account, receivable account, just to show the that what will its a dollar equivalent, how much we are owned in Australian dollars at the moment of the first transactions with rubles. So how much in US dollar we will get? Suppose, okay, first we will download it from the list on the currency list. Just make it bigger. On from the activities, on the bottom of your window you will see the activities. Just click on the arrow sign and you can download the latest exchange rate. QB will automatically download it, the QB. Okay, so you will see here. Okay, now we first move to our transactions. Suppose we are creating the invoice. Before that, so okay, before that you will see that when I'm clicking the Yuri Singh, okay, Yuri Singh, you will see the currency, that is the currency show up on here on Japanese yen. Okay, we have, oh sorry, we have used Japanese yen instead of Australian dollars. Okay, Japanese yen. Okay, and here you will see the account receivable is already created in JPY and in CAD. Okay, that is Canadian dollar. Okay, so the QB will automatically memorize it. Now we will create the first invoice in Japanese yen. Okay, so suppose I just give him the editing services. Okay, just leave the rate and just go and click OK, and just provide it in 10,000 yen. Okay, and when you click it, so I am just editing the current exchange rate so I can make you understand better. Okay, now what happened, that how much in US dollar we are going to receive when we issue the 10,000 Japanese yen bill. That 10,000 Japanese yen is equals to 0.0111337 to dollars, that is $133.70. So I just click save and close. Okay, and we'll see the trial balance, and you see that a new account receivable to Japanese yen in terms of is just generated here. Okay, and now what is the other thing is on editing income. You will see that 133.70 is just generated here. Okay, so this is how the invoice is created. Now what next? When of course when you issue the invoice, you are going to get paid. Now we are getting the paid of the invoices. The day we get paid, the Japanese yen are worth with a different amount from the JPY on the day that we created the invoice. Now we can either download the new exchange rate for the day we have got paid, or we can input the exchange rate that we need it to be into QB to record at the moment we recorded receiving the money. Okay, then QB will record the transaction normally, but add an adjusting general entry for the difference in rate from the invoice date to the payment date. What does it means? It means that we are not going to create the adjusting general entry. The QB will automatically create the adjusting entry for the difference between the foreign exchange rate of recording the invoice date and paying the invoice date. So suppose for example, let me see the date. So I'm just changing the date. Sorry for this transaction, sorry. Now suppose on 2nd of March 2024 we receive full amount from the URI for the invoice on 1st March. Okay, we receive full payment of 10,000 Japanese yen. The Japanese yen were worth of rupee of 0.01337 dollars on the day of the invoice. But today, on the suppose I'm taking the 5th of March date. Okay, those same rubles are now those same Japanese yen are now worth rupees of 0.014. What does this means? That we are getting the gaining amount. And what is the gain amount? $1 was 0.01337 and $1 was now is 0.014 of Japanese yen. We are getting the gain of 0.00063 per dollars, that is $6.30. So now we will record the entry from the customers on we are receiving the receive payments here. On 5th of March we have just choose Yuri Singh, and the payment amount option is changed up here. We use 5th March 2000. Okay, 10,000 we just deposited to cash in bank. The rate is gone to 0.014, and just you tab it. Okay, and you will see the reflection when you click save and close and see the trial balance. Here you will see that account receivable in Japanese terms will write off, and a new balance exchange gain or loss has been created by 6.30. Remember, I told you, when we activated the multi-currency features on the reports option, companies and under companies financial, these amounts are open up here: realized gains and losses and unrealized gains and losses. Now you will see on the realized gains and losses. So here you can see the gain and losses here. What is the realized amount is 140. Why it is taking 140? Because the exchange rate is 0.014 and it is taking the realized gain amount. If you want to see more clear, you can customize the report and move forward. Customization report we will see on the later part. Okay, so this is how the realized gains and losses feature is work. Now we move. Okay, okay, so this is how we covered this feature. Now there is also a feature called unrealized gains and sorry, you will see unrealized. You just know about the realized gains and losses, and now you will see unrealized gains and losses. This is the options we are going to discuss later, and this is more important part of the multi-currency features to those organization where the reporting system is work on quarterly basis or on the monthly basis or weekly basis. So now we move forward to another topic of this is fees for exchange deposits. Just you see that in the second example, when we receive the payment from Yuri, we will be directly deposited it into the bank account. Okay, however, if we need to deduct an exchange fee, we need to make an intermediate step. Okay, we need to record the full payment into undeposited funds. I already discussed the undeposited funds, so it will not going to be quite tough for you. We have already discussed. Okay, then with the same date record the same payment as deposited in the deposited window. That will give us the chance to deduct the fee. Okay, now for example, so okay, so now how we going to handle this? First we record the payment into the undeposited funds account, then we open the deposited window and deduct the fee and record the net amount into our account. Okay, first we are going to record our transactions. On 10th of January, oh sorry, 10th of March 2024, we did video services for Yuri, for take a 15th March for Yuri, and we billed him for 10,000 Japanese yen. Each Japanese yen was $0.013 on this day. Okay, we will going to create the invoice for Yuri again. I'm just telling you how to deduct a fee on exchange. Okay, so use this account is shown up automatically. Will I just go on to change the date of 10th of March 2024. The item I'm going to select editing, just remove the name, just remove the amount and just write the amount of 10,000 Japanese yen. Okay, and the rate on this day is 0.013. Okay, now we just click save and close. Okay, now on after 5 days, that is on 15th of March 2024, the day he pays only 5,000 Japanese yen. He pays half the Japanese yen. The Japanese yen is only worth of 0.012 amount, less than the dollar. Okay, so now what we will do? So there is a loss of their loss is $10 on exchange, that is 0.001 per Japanese yen into 10,000. Okay, like we learned to calculate in the like we calculated in previous windows. Now on the customer option, Okay, now first we are doing this exercise. Suppose now we are getting a payment. Okay, getting a payment, receive payment, sorry for the example we just do later. Now after 5 days, that is on 15 March 2024, Mr. Yuri is paying to us what he she 10,000. Okay, now we just click on this. Okay, and the exchange rate is 0.012. Okay, when you click on tab, and where it is going, we are depositing into undeposit fund. We are not depositing directly to a bank. So when you go and click 7 close, the trial balance will show up here on $120. Why it is shown up here? It is shown up here because of we just deposited into undeposited funds. So now what next? Now we deposited on the same day. Suppose we are depositing on next day. That day when undeposit, the financial institution is going to deduct 1000 Japanese yen for the exchange and transfer. Okay, this fee will recorded in the exchange and transfer fee expenses account we just going to create. Okay, so now we go to the banking and make deposits, and it will show up here. If you will all types of account, because here just click here and OK, as we already do. But now here we are just going to create the account. What is the what we will going to create? An expense account, that is exchange and transfer fees expenses. Okay, we just click 7 close, and we just paid to him one. Okay, now here you see now you will see that we know how to, when we deduct or we expend some amounts, the remaining amount will deducted. Now because of this, you are getting deposit 108 US dollars and 9,000 Japanese yen. Why you are getting? Because the fee has been deducted on exchange. So now the what effect has been done there? So the effect will be there. So when you click 7 close, and you will see the trial balance. First you see the undeposited funds, it will gone nil, and there is nothing on the account receivable part of Japanese yen. And what you will see, the exchange gain and loss is 3.07. okay, and you will see the loss of 10 US dollars because of receiving the payment and less. And you will see the new exchange and transfer fees account is shown up on the trial balance. So this is how a customer we have just learned about on the multi-currency feature, about the creating invoice, paying the creating the invoice and receiving the payment, and vice versa of related to AP. Now we will continue about AP in next session, and we will see the unrealized loss, gains and loss feature as well. So I hope you understand the today's topic, and I am just going to close the session of the day, and we will resume later. Okay, so thank you for joining the stream. Thank you for joining the session. Thank you.